Hi everyone, welcome back to the podcast. What are we going to talk about, Keshav?
So today I'm going to talk about already we have spoken on topic called how to do business. Sir. If you want to do business, we will pitch your idea to someone. If they believe in your idea, they will invest in your idea. Now I'm going to take their perspective, sir. The one who is going to invest in someone's idea. If I be the one, what should I see before investing in someone's idea, sir? I don't want to make mistakes, sir. I don't want to make a big mess. So what are the things I want to see before investing in someone's idea? What are the factors, key factors?
Okay. One of the ways you can make money is to become an investor. Okay. Stock market is one way, right? Mutual funds is one way. Bonds is one way. Buying gold, buying real estate. All these are different ways of becoming rich. One of the quickest way to becoming rich is investing in someone's
Ideas.
idea. So if someone like Jeff Bezos comes and gives an idea and you have free capital sitting on your table, you invest in their business and become part owner. I'm not talking about lending them money. Lending money is different. That is bond.
Yeah, sir.
I'm talking about investing.
Okay, sir.
So you become part owner with them. You believe in their business. And as they make profits, you get share of the profits. And when they make losses, you also suffer some of the losses. But by and large, if you believe in the right person and give the right amount of money and encouragement and market conditions are right, you can make good money. Instead of waiting 10 years to make your 5 crores, you can make that 5 crores within 2 years.
Understood, sir.
It's possible. But like you said, you have to study. So what's the first thing you look at is, who's the guy who's giving the idea to you? Does he have the skills? What is his track record? What team has he created? Right? What is he committed to this? How passionate is he? And he has the ability to change.
Okay.
Very important is the ability to
Change.
Yes. Because you meet someone who's so hardcore into his idea, like this. When he goes out and starts doing it, it's very different from what he thought. You are not agile, meaning you cannot quickly move and change around. You'll be wiped out very fast. So ability to change is very important. So first thing you do is study the person who brings the idea to you.
Okay, sir.
What do you do?
If someone pitches me the idea, I want to first study
The person.
what he is doing. I
You
want
want
to see
his
track record.
biodata. You want to know what all
track
has he
record.
done? Where has he studied? Who are his friends? What is he doing?
Will he
You
be
want to
able
know everything about him.
Will he able to
You want to know
pursue
his
the idea?
personality.
Understood, sir.
Then only get into the next one, which is what business is he suggesting? What is the business model? What is the strategy?
Okay.
Right? How is he planning to make money? Most important thing is you are an investor. You are doing this to make money.
Correct.
So how is this business going to generate cash? As Shashwat keeps saying, free cash flow. Apple's free spewing cash. So is this business model, this Keshav medical store, going to be spewing cash? So what is the monthly revenue going to be? That is important because that's where you're going to get your returns from. That's how you're going to get to 5 crores. Then based on that, then you should see if this business scalable and sustainable business model. That means, can I open multiple Keshav medical stores in other locations? Will those also be viable business opportunities? You have to see if their business, whatever you're doing, can it grow?
Okay.
Scalability is that. Can it grow? Can you spread?
Understood,
So
sir.
you have to see how it's making fulus and can it grow?
Okay, sir.
If these two are met, first you see the person, is the person great? Tick.
Okay.
Everything you checked, tick.
Then I
Sounds
have to see
great.
the
Next you see the business model.
scalability. Model.
Model.
and scalability.
No. Before scalability, is to make cash. How is it making money?
free
Revenue.
cash.
Right? Then you
Okay.
see is it scalable. So
Okay.
those tick. Then you come to the third one, which is market opportunity.
Okay.
Right? You have to analyze and see what is the opportunity for this business now. The current macroeconomics, microeconomics, where he's doing it. Is there a market there? Is he approaching the right place? Maybe Keshav was wrong. You should not open the medical store in this village. You should open it in a neighboring state in that village. His idea is great, but he's got it in the wrong place.
There is switch that. Understood, sir.
So you can tell him, hey, your idea is fantastic. You're the right person to do this. But I think you will have a better time opening the shop on the other road or on the other side of the city.
Understood, sir. Understood.
You're closer to your market. Your potential market is much better there. So understanding the target audience and what service you're providing or product you're giving, you should understand is in matching.
Okay. Understood, sir.
Of course, he will have all these ideas and he'll be trying to sell it to you. But you should independently do this because you're putting your money. Correct?
Understood, sir.
Then how unique is it? The quality. What competitive advantages this guy's product or service is going to have compared to the rest of the market?
Okay.
right? What makes you stand out? And how are you going to find out people who are going to use this product and service? How are you going to get feedback from them? Because if your customer satisfaction is not there, then the product will fail.
Correct.
If the customer experience, you don't want to be a Reliance, you want to be a Tata's.
Correct, sir.
Understood?
Understood, sir.
That is what you should keep in mind. Then who are your main competitors? To your idea, which you're launching with this guy. So if you're selling cars, you're going to make electric car and sell. Who are the guys who are already making electric cars?
Sir, Tata.
Right. I'm just saying as an idea.
Okay, sir.
I'm not asking you to answer.
Okay.
So whatever the guys brought business idea, if it's not unique, 99% will not be unique. There'll be 1,000 guys doing the same business, like selling t-shirt business. So who are all the guys? Who are the main competitors? What is their market share?
Okay.
Study their business, however they done. Then assess, being a new person entering this field, what do you have to do to stand out?
Understood, sir. We want to have some unique idea.
Yes. So this is what people in Shark Tank do. You've seen that show Shark Tank?
Sir, I'm getting that show's name, sir. I thought it was Sharks. So that's why I want to ask you how those people can see a business idea. I think they will...
Because for those guys to be successful investors, out of every 100 companies they invest in, only 2 succeed.
Okay.
But those 2 that succeed make so much of money, they'll make 10 times the money they lost in the other 98.
So my doubt is, how can they get to an idea that the person only explains 2 minutes? They will ask some questions.
Yes.
Then they will say, I will take with 30% equity.
Warren Buffett, we did a video where Warren Buffett was failing so many ideas he failed. Even Berkshire Hathaway itself was a big failure. So you know from this.
Understood.
To be a successful investor, you have to fail.
Okay. Understood.
Failure is part of it. Every ball you cannot hit 6, man.
Correct.
Some balls you have to let go. Some ball will be like Curtly Ambrose coming and chucking it on your head. You'll have to duck and pray to God that you don't lose your brains.
Sir, but for the people, they only see Warren Buffett as the person who...
That's because same thing with people in Shark Tank. In Shark Tank, you only see those guys' success stories of each investor. Why are they sitting and sharing all the sad stories of how he's lost money? That you'll have to go ask Google, aren't you?
Okay, sir.
So next thing, financial evaluation. That's when you look, is a project revenue models, cash flow, money that's required, investment that's required. Is it reasonable? Is it justified? Does it make sense? Or is the guy just trying to scoop you? He knows you're an investor. He's trying to shave your head and take money and go. Okay. Happened to Warren Buffett also, no?
Correct. We saw that.
Tesco, we saw.
We saw that.
Right. So then next thing which you'll do after that, if it's financial values, is legal environmental regulations.
Okay.
Is a business legal? We can't be selling ganja in India.
Correct.
They're not legal as yet.
Correct.
But in Thailand, it's an option. You can go to Thailand and you can set up a herbal stall.
Herbal stall.
Yes. You can open an Indian stall there.
Okay.
But you can't do that here. You'll be arrested.
Correct, sir.
So is it legal regulatory environments?
Okay.
Then exit strategy. Exit strategy is, an investor, you don't want to be in this forever. You put your money, it's become 5 crores. Now you want to sell and get out. That's what IPO. Okay. Everyone's using, IPO. So what is your exit strategy? So once you've made the money, you exit, take your money, and then you go on to your next investment.
Understood, sir.
You take that 5 crores and split that into 100 projects and make your next 100 crores and move on. You're not married. That's his baby. Yeah, we're just helping him bring that baby up. And then we enjoy some rewards for that. Some investors hang around. They stay. They have such a great relationship. Okay. They want to hang around.
Correct.
So you make the decision and figure out your exit strategy.
Okay.
So these are the kind of ideas you should keep in mind. Okay. And of course, all of this, you should put down terms and conditions and what you agree, what your goals are, what his goals are, what you're willing to do, what he's willing to do. Put everything down on a piece of paper. Have a lawyer, auditing team look at everything and then sign off before you make the first payment.
Understood, sir.
You should not have the chai and tiffin coffee and give him 5 lakhs and come out.
Correct. You should do everything.
Everything should be
printed.
Yeah. So that way you're secure and your investment is safe.
Understood, sir.
Understood?
Yeah, sir.
Sure. I hope you found this podcast informative and entertaining. Thanks, Keshav, for bringing us up. Because a lot of you have been asking me on LinkedIn and Instagram, if I start a business or if I want to invest in my friend's business, what should I do? I hope this kind of gives you a kind of a roadmap on how you can do this.
It's the one who asked those questions to Vinod, sir. This video will be helpful for you guys. So you can share it to your friends who are going to invest in some other's business. So thank you for watching our video.
Bye.
Bye.